Hello. Today I'm going to be looking at a very important part of this syllabus, arguably, probably the most important part of the syllabus, which is section C of the syllabus. And if you remember, I mentioned to you in the previous video that this syllabus can actually be grouped into 3 categories. We can look at it from organization in the past, the information for organization in the current, which is present, and future. What we are looking at now in this video and the next series of videos you'll be seeing is about the current, which is about now. That's where I want us to start, which is section C. Yeah, so this is the whole syllabus, but we want to start with section C. And I told you something about the current. I said what organization is interested in now is about being profitable. And being profitable means that the organization wants to have revenue in excess of cost, because that's the only way to be profitable. And when you look at this scenario, this is price times quantity, and the organization does not have control over price because it's mostly external. However, the organization can control its cost as much as possible. So the emphasis on making today, the current situation, the present situation, a successful one is to know what is going on about the cost. And that is why even in the entire career of a management accountant, the major focus is cost. Now, if we're talking about cost, what is the ambition about cost? The ambition about cost is to minimize it as much as possible. Yeah, is to minimize without losing value. So that is what a management accountant wants to do. But can it do this without understanding the cost? It is not possible. So that is why I'm going to start this particular video with understanding of cost, because that is the first thing you need to understand as a management accountant. After this paper, you should be able to operate, you should be able to work as a management accountant. So you need to understand what cost is all about. I know you know cost is expenses. However, what are different types of cost? What are the nature of cost? What is the implication of different types of cost? You need to understand all of that. How are they grouped? How are they classified? And how does it impact on profitability? What do you need to minimize? What do you need to maximize? All of that, you need to understand your cost first before you can make any meaningful progress on minimizing your cost. So I will start with understanding. And the part I'm going to start with is cost type, which is very important because there are different ways of categorizing cost. There are different ways of classifying costs. And I don't want you to think it's a particular type or it's a particular way. There are different ways depending on what you are looking at. But what is critical here is that you are able to understand different categories. Regardless of how they've been grouped, you are able to distinguish between these costs and understand what it means. Where I'm going to start from is this category: material cost, labor cost, and what I will call other expenses. So this is one way of categorizing cost. And it's interesting that almost any organization can categorize their cost like this. Any organization can categorize their cost like this. However, I need to let you understand that in this paper, the emphasis will be on manufacturing cost. Manufacturing industry, rather. So most of the costs you'll be talking about will be quite related to manufacturing industry. But it doesn't mean that manufacturing industry is the most important industry. No, In fact, in the reality, service industry account for almost 80% of the industries in the world. Yeah, manufacturing is about 20%. However, we are using manufacturing industry in this paper so much because it is easier for you to understand these various types of cost when we use manufacturing industry. So we'll be putting so much emphasis on that, and please follow through just as I've explained. Now, what is material cost? Material costs are just costs associated with physical goods required to operate the business. So I like to use examples a lot. If your business is to manufacture table is your product, whereas your material will be wood. So whatever you are using to make your product is your material. So material is your item, is that thing that you are using to make your final product. So it is called raw materials, right? And the cost of that materials, the cost of that wood will be categorized as a material cost. Likewise, if your company is into manufacturing of book is your product. So if you are producing books, that's your product. Whereas your material will be paper. So the cost of paper will be your material cost. Labor cost, very easy. Labor cost is just looking at the cost of the staff that are working in the production division. So everybody that is involved in turning that paper into books, turning that wood into table, their cost is called labor cost because they are workers that are working in the production division. They work in the plant. They are the one running the machines. They are the one moving the product from the raw materials from the warehouse to the production. Those guys that are working directly inside the production firm, inside the plant, those are called the labor staff, and their cost is called the labor cost. Then other expenses are just costs incurred in the organizations which are neither material cost nor labor cost. So this is neither material nor labor cost. So which means this can be anything. It can be rent, it can be internet, Wi-Fi, yeah. It can be anything. It can be insurance premium. So all those other costs that you can clearly say that this is not labor and this is not material. Those are other expenses. So generally speaking, all costs and organizations can be categorized into those three groups. But that doesn't mean that that is it all about. There's another way you can categorize costs. And the other way is to have what we call the production cost and what we call the non-production cost. You see, this looks quite straightforward, but you need to be careful. Yeah, because the first question is you'll be asking yourself, why do we need to categorize cost like this? And the answer to that why is because this is used in inventory valuation. Because when you know what is production cost, all production cost must go into inventory valuation. So which means that if I spend $20 on production cost, it's not an expenses in P&L. It does not go to P&L. No, it goes into inventory. So I don't expense it. It goes into statement of financial position, which is also called balance sheet. It doesn't go into P&L. So such expenses is capitalized. That is another way we're talking about it. So we capitalize it if it's a production cost. We capitalize it in inventory. So we add it to inventory. It becomes part of inventory. So you discover that it's important to actually know whether a particular cost is production cost or is non-production cost. And what are those costs that will qualify as production cost? Those are the costs. Yeah, so production cost now. Those are the costs that are incurred while trying to manufacture a good or delivery of service. So take for instance, if you're talking of, let's talk about that same table that we've been talking about. To manufacture this table, we need to buy material, which is the wood. We need staff who will convert that wood into table, so there will be labor cost. And beyond that, even there will be machine that we're going to use. So there will be cost of machine, yeah, that will work on those materials to turn it into what the final product is, which is table. So we need to use machine. But it doesn't end there as well. Yeah. There will be maybe even transportation cost to move these materials. Yeah. From where we bought it from to our warehouse. So there might be some logistic cost, which is interesting. Yeah. Likewise, the factory that we are using to manufacture these things, where we kept the machine and the materials that we're using and all of that, there will be rent that we're going to be paying for that factory. So rent of the factory. So we're going to pay rent there. Yeah, because we're not going to be using that building free of charge. Even if it's our building, then there's a cost of that building. Right. So you will discover that all of these costs that I've highlighted, they relate directly. You can see that we are using them because we have to make a production. And they are taking place right in production division. This is the factory we are using. This is the logistic cost on the materials that we're using for production. This is the cost of paying our staff in production department. This is the cost of the machine that we are using. So all of this is all about production activity. And because of that, they are production cost. Because these are costs that relate to production. So they are incurred in the process of trying to manufacture those goods. Very important. Right. So if you have to depreciate this machine as well, that will be production cost. And that's why when you talk about depreciation, you discover that depreciation in a P&L can be divided into two. You see depreciation figure in cost of sales sometimes. You also see it and another amount in other expenses. Usually what is happening is that the one you see in cost of sale is coming from inventory because it is the depreciation of production asset, production machine. Whereas this production amount in other expenses is probably the depreciation of other assets that are not in the production division. Maybe vehicles that are being used in the head office. Yeah, maybe the furniture in head office, right? Which is not in the warehouse, which is not in the production department. So don't get confused. We see depreciation in two different parts in the P&L. Just understand that there will be a part that relates to production and there's a part that doesn't relate to production. And that's why you might have that. So the other part that doesn't relate to production will be grouped as part of non-production cost. Because non-production costs are those costs that are not incurred in the production division. So they are incurred by the business just to be able to operate successfully. Yeah, not like you are using it in the production division. Like if you have a legal cost now, that is not. So let me give you an example. If you have a legal cost, that is not a production cost. Though you need to incur that in the business to run, but it's not directly happening in the production division. If you have to borrow money, yeah, and you pay interest, finance cost, it's not a production cost, right? Selling cost, yeah, it's not a production cost because before you start talking of selling, you are done producing. So you can pay for marketing, you can pay for promotion, you can pay for anything. All those are happening after production. Production's cost ends once the item is ready to be sold. Yeah, whether you now need to transfer it to where it's going to be sold or you need to keep it somewhere, all that are happening after production and there are no more production cost. So production cost is from the beginning when you move the raw materials to when the final product is ready, and it ends there. So things like distribution cost is non-production because it's happening after production. Likewise, admin cost is not production because it's not even happening in production division. So please take note of that and understand those peculiarities and differences. Yeah. Another type of cost, another way of categorizing cost which you need to understand is what we call the direct and indirect cost. Direct and indirect cost. Yeah. This one, please pay attention to it. This direct cost is also called prime cost. That's another way they can tell you. They say prime cost, what they are talking about is direct cost. And what is direct cost? Direct cost is a cost that can be easily linked to the production of one unit of a product. So it's linkable to a unit of a product. That is the direct cost. Indirect cost is also called overheads. Yeah, and that's why you can have general overheads or production overhead, because even in production department, the production cost, you can have overhead, and you can also have overhead outside production. So that's why you can have production overhead. If you have production overhead, it's a production cost. It's indirect cost, but it's happening in the production space, and you see it because all these items that I put here, rent is an example of overhead, but it's happening in production space, but it's not directly attributable to a unit of a product because you are renting a full space for all items. It's fixed, and you cannot say this space is this cost and that is the space for one unit. No, that cannot work. It's a big warehouse for everything. So it's a production, but it's not direct. So if you cannot directly attribute a cost to one unit of a product, then it's not a direct cost and it's an indirect cost. Yeah. Let me give you an example to make you understand this better. Let's say company A. This company manufactures 3 different products. So this company A produces cars. This company A produces shirts. And let's say the same company A also produces, let's say, wine. The question you ask yourself is, what are the costs that you can easily say, I can separate to 1 unit of car, 1 unit of shirt, and 1 unit of wine? The easy ones, take for instance, maybe you can talk of the materials you are using to make the car. Likewise, the labor in producing the car. You'll be talking of the cotton you are using to manufacture the shirt. It's easy. Yeah, maybe the bottles, right? The ingredients, and maybe the water volume. So all of this, you can easily attribute these items to 1 unit of each of these products. And that is why all of this will easily be called direct cost. But look at this company that has 1 factory, yeah, for all its production going on, but different machines in that factory. This factory will be paying rent. Can you attribute any of this rent to 1 unit of wine, 1 bottle of wine, or 1 piece of shirt, or 1 car? It's not possible. And that's why rent of such a warehouse will be called indirect cost, because it is difficult to attribute any amount of rent to 1 bottle of wine, or 1 shirt, or 1 car. Or maybe the Wi-Fi they are using, internet service that they are using in the production department. Can you attribute the cost of internet to 1 bottle of wine or to 1 shirt? Because everything is happening right in the same vicinity, in the same environment, in the same property, and the same Wi-Fi that they are using is what whoever is working on cow is using, whoever working on shed is using, whoever working on wine is using. Unfortunately, you cannot attribute the cost of internet to one bottle of wine. However, you are using it in the production. So these are indirect costs because they are always difficult to be able to attribute them to one unit of production. Yeah, so that's why another way I can tell you is when you're talking of direct cost, they are usually the material cost, the labor cost, and machine cost. Because you can use machine hours to determine that. Yeah. And when you're talking of indirect cost, is usually you're talking about overheads. Right. Let me say this quickly, yeah, just to even drive it home very well for you. Note that all non-production cost, remember, production cost taking place outside the production area, all non-production costs will always be indirect. Yeah, because not even gonna be close to production area. All direct costs will be production, and all direct cost will be production cost. Take note. But not to say that all indirect costs will be non-production. No. All indirect costs cannot be non-production because there will be some indirect costs, like I said, rent of the production house, or even depreciation and all of that. They are indirect costs, but they are still production costs. So take note, and I hope that is clear and helpful.